Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Hey everyone, welcome back to Kitco News, here on location at the Rule Symposium in beautiful Boca Raton, Florida, where it is a hot day, not as hot as Toronto. I'm Jeremy Safford. We want to welcome you back just as gold has just dipped below that $3,300 an ounce mark, but it's still maintaining here. And some say that this market is no longer driven by rate cut speculation or ETF flows. It's actually being driven by sovereign demand. Just yesterday, we learned that China's central bank added to its gold reserves for an 8th straight month in June, lifting total purchases to just over 34 tons since November. Now, the People's Bank of China is accelerating its move away from the US dollar, even as gold prices sit near record highs. And this isn't isolated. Central banks are now the strongest net buyer of gold in modern history, while trust in the US debt erodes. And at the same time, select miners are finally being rewarded, but only those delivering strong cash flow and operating discipline. Agnico Eagle is one of them, with the best jurisdiction, some of the lowest costs, and of course, a deep pipeline. The company is positioned to outperform as capital returns to the sector. And joining me now is Ammar Junee. He's the president and CEO of Agnico, to talk about the company's strong performance. We're going to get into the growth and what's next. Welcome. Thanks for making the time.
Thank you, Jeremy. Pleasure to be here.
Pleasure. Pleasure's all mine, because, I talked to Sean before, Boyd, and we've been a big fan of what you guys have been doing. And I got to get back to gold, its new order here in terms of the world, because it's been crazy. I mean, central banks keep buying. I mentioned China just logged its 8th straight month. What does this level of official sector demand really mean for the industry?
Well, it's very supportive to start with. And so let's talk about official sector demand, but let's talk about what's been happening for 25 years. Yeah. I think a lot of people don't realize gold has been one of the best performers, not just this year, but for 25 years. Going back to 2000, the Dow is up about a factor of 5. Gold is up by a factor of 10. And by the way, our share price is up by a factor of 25. Yeah. But what's happening now on the sovereign side, and you made a good point, Jeremy, it's not just the Chinese, it's a lot of central banks. And what central banks look at as their reserves, they look for two things. They want to have something that is secure in value and that they can have access to. And for 40 plus years, that's been the US dollar. Well, right now you're in a situation where there is, again, as you said, less confidence in US debt, less confidence in the direction of the US dollar. Is it being pushed weaker? A lot of people would say yes. So there's the underlying value of the asset. But I think what is more concerning to the central banks is that second part. Do I actually have access to it? Right. And think about what happened when Russia invaded Ukraine. Mm-hmm. Within 24 hours, they were out of the SWIFT system, which means, Jeremy, within 24 hours, they couldn't access any of those US dollars. So central banks around the world are saying, hold on, let me get this right. I've got all my reserves in US dollars. One, I don't know if it's going to maintain its value. And two, if somebody in the US decides that I can't access it, suddenly I can't access it.
Yeah. The US has definitely, weaponized the dollar. We've seen it even with the T-bill auctions in the past couple of months. I'm curious, is just the central banks, and a lot of them being underreported, by the way, in terms of the accumulation, we seem to still have this price floor, $3,300. It's been stable. A lot of people expecting a dip. It's still stable. Is it just the sovereign accumulation?
No, it's not. It's a good question again. Look, when gold goes from $1,800 to $3,200, the question you ask, or $3,450, the question you ask, of course, in anything, not just gold, any trade that moves like that is it going to retrace? And it's been months now that it's been supported above 3,000. So clearly the central banks are playing a role, but they're not the only ones. I mean, look around at this conference. There's a lot more people this year than there were last year. There's a lot more interest in gold. We're seeing more interest from generalist investors. So while the central bankers are an easy thing to explain, this is clearly much, much beyond that.
Yeah, and it doesn't feel like it's stopping anytime soon, maybe just beginning.
Well, if again, I've been in this business a long time, not just in gold, but in other sectors. You're always looking at when a big increase up, you're looking to stabilize and set a new level from which to build. And I think that's what we're seeing.
Yeah, absolutely. Okay, well, let's talk about it then, because that momentum has obviously made it such that you're printing cash. I mean, it's literally printing cash at these levels.
Actually, we are literally mining cash.
Mining cash and getting the fiat back. I got to ask you, I mean, the free cash flow that you're generating this quarter, next quarter, seems like if we have this base, one would say that it's going to be for quite a few quarters to come. Is it just hitting the stock side now on the equity?
Well, we're starting to see it. I mean, we were ahead of most of our peers in the increase in share price, but we are, I can't talk too much because we're close to quarter end, but gold price has gone up a lot versus where it was last quarter, so we're going to do fine. But I am also of the view that our peers are going to do fine, and we want that. And I want to be very clear: we want to do well, but we also want Barrick and Newmont and Kinross and Gold. We want all of the seniors to do well, because that's what brings confidence into the sector. Right. And the size of the gold market relative to the generalist investor is minuscule. And so what we want is not just that what a CEO of Agnico, I don't want just Agnico to do well, I want my peers to do well, because that's what will bring in the generalist money.
Yeah, makes sense to me. And I mean, speaking of your peers, it's been quite a narrative for the past, I'd say 6-7 months, that Agnico is number one in terms of those costs, in terms of margins, getting your costs low. And I want to transition into that a little bit, because how sustainable is that going to go forward? I mean, you got lower gas prices, WTI. Yeah. What does this look like in terms of those savings and increasing that?
Well, we're very proud of that. Based on public numbers that I can talk about, in the first quarter of 2025 versus the first quarter of 2024, so year-over-year difference in Q1, the gold price was up about $800, Jeremy. Our cash costs were up $2. Our all-in sustaining costs were up $7. So of that $800, somewhere in the neighborhood of $790 to $795 went to our owners. We are very proud of that. That's why people buy our stock. They can buy gold. The reason they buy our stock is to give them more than just buying a gold bar. And we can do that two ways. One is by making sure we control our costs, which we've done, but also by increasing production per share. And we've done a good job over the last 20 years. Our total production's gone from 250,000 ounces to almost 3.5 million, but more importantly, our production per share has about tripled. Right. And we have projects over the next several years where we think we can continue to add considerably to production per share.
Interesting. Well, let's get into that and the development and the deployment strategy on that capital, because you've got growth assets, you've got the buyback flexibility. What's the current hierarchy in this system? Is it kind of reinvesting? Is it M&A, or is it shareholder returns?
At these prices, honestly, it's all of those. It is reinvesting, it's shareholder returns, it's strengthening the balance sheet. Of course, we look at opportunities, but an important thing about capital discipline is, especially when the market is strong, don't feel pressured to go out and do something just for the sake of doing it. And the projects we're investing in, which are Detour, can we get it to 1 million ounces a year? Or we have a plan. Malartic, our vision to get it to 1 million ounces a year. We're building Upper Beaver, or we're doing some work on Upper Beaver with a view. We have to take some bulk samples, et cetera. We're looking at Hope Bay. We're looking at San Nicolas. All of those are exactly the same projects, Jeremy, that we talked about 2 years ago when gold was $1,800. And to us, that represents capital discipline. We are disciplined. The best projects that made sense $1,000 ago are still the best projects that make sense today. Yeah,
it's interesting. I mean, I wonder if the market's rewarding capital discipline, or if they're still chasing the beta, the generalists at least.
Yeah, I think that I think it's natural when gold prices go up for people to look more and more on growth. But the important thing is, you need to be disciplined. You need to make good deals. And I really believe, and you're seeing it at Agnico and you're seeing it at our peers, the seniors and the big intermediates are in fact being a lot more disciplined on this cycle than maybe historic side.
Yeah, no, good to hear on that side, especially the G&A costs. When we talk a little bit about jurisdiction, you've stuck to Canada, Finland, right?
Australia,
you got Mexico. Stable regimes. Yep. Is there still a hard boundary there when, looking at global assets?
There is a hard strategy. And our strategy that we've had since 1957 that I think really has served us and our owners very well is while we will look anywhere in the world, we don't consider ourselves a global mining, we consider ourselves a regional mining. And we will only go, Jeremy, since 1957 into regions that meet two criteria. Of course, it has to have geologic potential, but for multiple mines over multiple decades. And it has to have the political stability to allow you to operate multiple mines over multiple decades. Canada does that, Australia has that, Mexico has that, Northern Europe has that. There are places in Central and South America that have that, but there are places that have fantastic geologic potential that we won't go to because frankly, mining is hard enough without having to worry about somebody seizing your asset or completely changing the rules. Once you build a mine, you can't move it. It's there.
Yeah, and we're seeing that. Of course, there's this Reuters report out this morning about Mali and the potential with Barrick having to get rid of some of their gold that the government has seized. And that brings me, with the rising nationalism that we're seeing in different countries, does Agnico's strategy command a premium?
Well, I think the way I would put it is this is what you learn in, maybe I'm a nerd. I remember my very first economics class in high school. My very first one. And the concept was risk versus return. So does it demand a premium? What I would say is if you have less risk, you should have a lower discount rate, which by definition means you have a higher premium. And that just makes sense.
Last time we had Sean Boyd on, he was talking about the Arctics and how that fits within the operations of Agnico. Obviously, with all this talk about minerals in the White House right now, and those countries, and every country, including China, looking at strategic minerals, what's your long-term vision there?
Well, let's take a look at Nunavut. So we've been in Nunavut for almost 20 years now. One company, we represent somewhere between 25 and 30% of the entire economy, not just the mining economy, the entire economy. So what potential does Nunavut have from a resource, and then how important is it strategically for Canada? Well, from a resource, think of this, 3.5 times the size of France. Population 35 or 40,000 people. So imagine a country the size of France with a population of 10,000 people and multiply that by 3.5. So great resource potential, great human potential, and strategically very important for Canada. Russia likes to think of itself as an Arctic nation. China is a quote unquote near Arctic nation. The Arctic is becoming more strategically important. Canada is realizing the world is changing and we need to invest more for our security and economic development in the Canadian Arctic goes hand in hand with that sovereignty.
So there has been some government level discussions. There are, yes. Yeah, and obviously you're on the right side of those discussions.
Correct. We are talking with the government. We're talking with different elements of the government, and we're happy to do that.
I got to ask you, it's a pretty broad question before we let you go, but when we're thinking about the gold mining industry, where is it heading in the next 3 to 5 years? Are we going to have fewer, larger producers? Are we going to see more vertical integration? What are your thoughts?
Well, let's talk about the gold price and then the industry. Of course, of course this is self-serving, but I really believe it. The gold price, I think, is going to continue to appreciate. I don't know where it's going to be next week or next month, but everything, Jeremy, that's pushed it in the last 25 years is going to continue to push it. Think of gold. It's kind of unique. It's not only one of the best performers in the last 20 years, it also gives you good risk mitigation. Mm-hmm. So to get an asset that gives you a good return and reduces your risk, there's very few of those, and gold's role is going to continue. And I think the gold industry has really shown a lot more discipline which is fantastic. And I think what you're going to see is the gold industry, hopefully Agnico at the very front of that, making a ton of money, a ton of cash, great returns to shareholders, and a lot more investor interest coming into the space.
I'm excited. All right, well, we'll talk to you at the next one of these. Of course, Ammar Al-Joundi is the president and CEO of Agnico Eagle. Thanks, my friend.
Jeremy,
appreciate your time.
Thank you.
I'm Jeremy Saffron here at the Rule Symposium all week. We're going to be talking to exceptional guests like Peter, so stay tuned. Hit the subscribe button. We'll see you next time.
Kitco News special coverage of the Rule Symposium Natural Resource Investing is brought to you by G Mining Ventures.